Hello everyone. In this part we're going to finalize chapter 2, and the last part of this chapter covers something called the trial balance. So the trial balance, from its name, it's a statement that actually lists all the accounts in the ledger with their debit and credit balances. And they have to match. If they don't match, then there is an error. So it's a statement that verifies that the transactions were recorded properly in the ledger, in the journal and the ledger. So, as it says here, the equality of debits and credits in the ledger should be proven at the end of each accounting period by preparing the trial balance. So the steps in preparing a trial balance are as follows. In the first step, we list the name of the company, the title of the trial balance, and the date of the trial balance is prepared. So it's just like some kind of the information that would explain the trial balance. Then the important part of the trial balance is step number 2 and 3 and 4. So in step number 2, we list the accounts from the ledger and enter their debits or credit balances in the debit or credit column of the trial balance. Then in step number 3, we told the debit and credit columns of the trial balance, or in other words, we add the values. And then in step number 4, we verify that the total of the debit column equals the total of the credit column. The first kind of trial balance that we prepare after we record the transactions and we post them to the ledger is called the unadjusted trial balance. And actually we are going to see three types of trial balances in this course. The first one we're going to see today, which is the unadjusted trial balance. And then in the next chapter we're going to see something called adjusted trial balance. And then in the following chapter, we'll see something called post-closing trial balance. So we have the unadjusted, adjusted, and then post-closing. So we just need to understand what is the unadjusted trial balance in this chapter. So distinguished from an adjusted trial balance and a post-closing trial balance, the latter two are prepared in later chapters and including additional information. So this is how the trial balance would look like. So as we said in step number 1, we list the name of the company, the title of the statement, which is the unadjusted trial balance, and then the date, and in this case it's December 31st, 2017. And then in step number 2, you see that we're listing all the accounts in the chart of accounts, or basically all the accounts that are available in the ledger. And then here we have the account number code. And by the way, the account number is something that varies from one company to another. It's not a standardized kind of code. And then we have the debit balances and the credit balances. And you can see here the cash has a debit balance of $2,065, accounts receivable $2,220, supplies $2,000, and so on. For things that have a credit balance, you can see here like accounts payable, they have $900, unearned rent, which is a liability, for $360. And again, the same thing. At the very end, if we have the debit column and the credit column, these two values should match. And that's step number 3 and 4. Step number 3, we add the two columns. And step number 4, we verify that these two are equal. So what if it's not equal? Or what if they are not equal? Then we have a problem here. Most probably we made some error. So what kind of errors that we can find? So errors affecting the trial balance. We have two kinds of errors that we're going to be talking about here. One is called transposition, and the other is called slide. The transposition occurs when the order of the digits is copied incorrectly, such as writing 542 as 452 or 524. So in other words, like flipping numbers. And this is very common, especially when you're working under pressure and you have a lot of things that you have to complete within a deadline. Sometimes people, when work under these kind of conditions, they can make these kind of mistakes. And if this happens, then the two columns are not going to match. Then we have another kind of error, which is called the slide. The slide here, the entire number is copied incorrectly, one or more spaces to the right or to the left. So to see an example, we're writing $542 as $54.20. Or you can add a 0 and you make it $5,420. So these are the kind of errors that you can, or people can make, or accountants can make, and usually the trial balance would detect these. There are some errors that are hard to detect on the trial balance, and we call these the errors not affecting the trial balance. So errors that do not cause the trial balance totals to be unequal may be discovered when preparing the trial balance, or may be indicated by an unusual account balance. For example, since the business cannot have a negative supplies, credit balance of the supplies account indicate an error has occurred. So these are the kind of errors that we can discover by reviewing the trial balance, even though might not affect the debit and credit equality. If an error has already been journalized and posted to the ledger, the correcting journal entry is normally prepared. So let's see how we correct an error. So assume that on May 5th, a $12,500 purchase of office equipment on account was incorrectly journalized and posted as a debit to supplies and a credit to accounts payable. So keep in mind, when we buy office equipment, that's a different account than supplies. So what we did as a mistake, we recorded an account by mistake, which is the supplies, instead of the correct account that should have been office equipment. So remember, office equipment and supplies, both of these are assets. So what I want to do here to correct this error is that I want to remove the supplies, and instead I want to record the office equipment. Assets, they have a debit nature. To remove it, I record it on the credit. And to add the correct account, I record it on the debit. And this is why in this journal entry here, you see that we debited office equipment, which is the correct account that should be recorded, and we credited supplies to remove the supplies. Because remember, supplies is an asset and it should be on that debit side. Once I'm crediting it, I'm removing it. Okay? So we have $12,500 on each side, and we have this brief explanation that says to correct an error by debiting or to debit supplies on May 5th, or the error that we had for supplies by the debited supplies on May 5th. And then we have an invoice that shows that the asset purchased was office equipment. There is a checkup corner. I'll leave that for you to work on, and I think you have the answers here, so you can practice that, how to prepare a trial balance. And now I just want to wrap up this chapter by an analysis for decision making. And today we're going to talk about something called horizontal analysis. Remember, horizontal is this way, vertical is that way. So here we're just going across time, because usually we have like different periods presented in different columns. So in horizontal analysis, we're going over time. So horizontal analysis, the amount of each item on the current financial statement is compared with the same item on an earlier statement on an earlier date. So the increase or decrease in the amount of the item is computed together with a percent of increase or decrease. When two statements are being compared, the earlier statement is used as the base for computing the amount and the percent of change. So let's see how this works. So here we have an income statement for one company. It's actually an attorney. His name is Jay Holmes, attorney at law, and you see here this is the income statement for the year ended December 31st. We usually list the most recent year at first before the previous year, and then we have a column for the difference, and then I'll show you how to calculate the percentages. But you see here on the top we have the revenue, and then we deduct from the revenue the expenses to get the net income. So we have fees earned, that's $187,500, and then we have operating expenses, which are these five numbers. We added all these five numbers. The total operating expenses is $92,500. We deducted from $187,500, and the net income is $95,000. So basically, this attorney earned or made $187,500, but his expenses were these five expenses, which include wages, rent, utilities, supplies, and some other miscellaneous expenses. So the total operating expenses for him or her is $92,500, and the net income is $95,000. The previous year, you can see that the net income was a little bit lower. So he or she had $150,000 in revenue, and their expenses were a little bit lower, and the total of the expenses were $70,000 1,800, and that led to a net income of 79,200. So if we get the difference, you can see that everything increased except for one thing, which is supplies expense. For some reason, they used their supplies more wisely or more efficiently, and that led to a decline in their supplies expense from 3,000 to 2,700. So what we do, we want to calculate the percentage change. How we do that? So we start with, let's see, fees earned. We get the difference, which is 37,500, and we divide it by the base year. The base year is the first year we're comparing to, which is year 1. So 37.5 divided by 150, and that's 25.25%. So basically that's everything of how we deal with this kind of horizontal analysis. And it's very important, it's very useful for us to see how changes take place and what is the amount of the change in the financial statements. So in this case here, by looking at the income statement, you can tell that fees earned, or our revenue, increased by 25%. The biggest increase in the expenses was related to utilities. What comes next was the wages, and then we had rent, actually rent and the miscellaneous. And actually, the only thing that improved is 10%, is the supplies expense. You can see that it went down. The bottom line net income, even though our revenue increased by 25%, the bottom line net income only increased by 19.9 because our total operating expenses increased by 30.6%. So you can see that the amount of expenses increased relatively higher compared to the revenue, and that led to a decline in the percentage of net income, even though it's an increase, but it's not the same percentage as the increase in fees earned. Again, this is just some kind of analysis that you can do by looking at this kind of horizontal analysis. And by that, I conclude chapter 2. I hope this was interesting for you, and thank you for watching the video. I want you to spend some time reading the chapter from the book, maybe watch these videos, and hopefully they will be helpful for you. Let me know if you have any questions, and I look forward to seeing you next week.